Bloomberg Audio Studios. Podcasts, radio, news.
An Israeli drone strike near the Lebanon-Syria border has reportedly killed a prominent Syrian businessman.
The first foreign military incursion into Russia since World War II.
Hamas says Israel killed its political leader Ismail Haniyeh in an airstrike on Tehran.
Gold is back in fashion. Central banks around the globe are returning to the precious metal as geopolitical tensions increase. And many African nations are looking to build up reserves, too, as they look for stability at a time of growing uncertainty. And the price of gold is responding.
Gold continues, in terms of price, its march ever higher.
Gold is a great safe haven.
The spot price of gold touched $2,483.73 US per ounce. That's its highest price ever.
We've got it going to $3,000 over the next 12 months.
So what's behind the push for bullion, and will this trend continue? I'm Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. Bloomberg's Ndlovu has been following this rush for gold, and he's joining us now from Zimbabwe. Thanks for joining us, Ray. How are you?
Thank you for having me, Jen. I'm very well, thanks.
Thanks so much for being here. Listen, let's start maybe with the history, if you can. If you could just take us back to really how this gold rush started.
So we've seen a couple of African nations jumping onto gold, basically to prop up their economies. That kicked off back in about 2022 with Ghana, basically swapping gold for oil, to pay for oil because of an FX shortage. And then last year, Madagascar as well, jumping onto gold to try and prop up their reserves as well. Madagascar is the largest vanilla producer in the world, and they saw a dip in production. And so naturally, the shift to gold was an attempt to try and ensure that they have diversified their portfolio and have enough supply of Forex. And then particularly this year, we've seen several other African countries as well getting into that playbook, particularly Tanzania as well, buying about 6 tons of gold in June.
And you mentioned, Ray, the Forex reserves. Is that the main reason behind why a lot of these banks are looking to build up their gold reserves? Or are there other issues that they're maybe looking at and saying this is the opportune time?
Well, that's one of the reasons, but much broader than that, one of the compelling reasons for the central banks is to diversify their portfolio. The central bankers that we did manage to speak to, South Sudan and Zimbabwe, as cases in point, pointed out that their strategy to diversify their portfolio and their holdings, particularly given the global tensions that are at play at the moment, the war in Ukraine and what we're seeing in the Middle East as well. So most of these African countries are nervous at what the implications of some of these events mean for them domestically. So using gold, which historically has always been a safe haven, offers them comfort. And I would also add on and say some of these African countries actually produce gold. So they do have a channel where they have within country the ability to buy gold from artisanal miners, buy it in local currency, and then keep the holdings and then sell it off for FX at whatever stage they may then require to show up their reserves. So it's really a diverse mix of reasons why we're seeing many of these countries jumping onto the gold rush, as it were.
And especially when it comes to commodities, we are hearing more and more African nations trying to at least reap some of the benefits, right, that global investors are getting with commodity prices right now. Ray, when it comes to this gold rush, and specifically maybe we talk about Zimbabwe. Zimbabwe, of course, has a long history with the US dollar. And the reporting says that the attempt was maybe to try to de-dollarize the economy, right? How much is the dollar and the USD and what's happening in the US sort of playing into this gold rush?
I think it's a factor for different countries. In Zimbabwe's case, Zimbabwe is definitely an outlier. I think their overall strategy and focus is to de-dollarize. They've not been shy about saying that openly. Whether it will succeed or not is something that we keep an eye on. But for other countries, I don't get the sense that it's necessarily slanted towards abandoning the dollar, because the dollar still plays a pivotal role in terms of the mix of reserves. But I think for countries like Uganda is another example, which has also moved to the gold rush. Buying bullion is purely a way to diversify, given some of the domestic issues that are happening in Uganda, the LGBTQ situation that took place, where basically, there's new legislation that came on board, and then Uganda was then cut off from funding. So they are looking at that and saying, look, there may be a possibility that we may not have finance accessible to us because of the laws that we've enacted. Therefore, gold could offer us some room to continue the smooth running of the economy. So I think for different countries, there's different reasons why they are moving to gold. But certainly in Zimbabwe's case, it's clear-cut. It's an attempt to try and move away from the dollar.
Is there a risk to this strategy and this approach? And I know you're saying it's different depending on which country we're looking at, but can you make the statement that maybe having too much gold reserves could potentially be a downside for some of these central banks? Or, is there a perfect balance that these countries really need to strike?
So the indication that we have for now, and also coming from the World Gold Council, they expect central bankers right around the world to increase their holdings for the next 12 months. So there isn't any immediate risk in terms of over-accumulating gold right now. The price of gold has been very high. It's reached record highs this year. And some of the forecasts putting it at 2,700 by end of the year. And some analysts also think it could breach $3,000 by early next year. So I think the outlook definitely is favorable at the moment. And the countries that are on this gold rush are bullish. They feel that they're not going to lose out or they're going to have any risk whatsoever at this point, because I think all indications really point to a positive forecast for gold.
Stick with me, Ray. When we come back, we're going to look at which other countries are building up their reserves and how long this trend might actually continue. We'll be right back. And welcome back. Ray Ndlovu is still with us, and we are talking all things gold and gold reserves. Ray, we talked about a few of the countries there that are building up their gold reserves. Are we seeing more and more countries really joining this trend? Are they seeing countries like Uganda and Zim benefiting off of it and coming out and making their own statements about how they want to maybe get into this as well?
Yeah, I think the countries themselves are certainly bullish about getting into gold, and their main driver right across the central theme is basically diversifying their portfolios. And with some of these countries, Uganda and Zimbabwe, particularly Zimbabwe, they do have the gold in country. They produce gold. They have gold mines. So for them, it's almost like a no-brainer in a sense to say, look, we have the commodity. Why not build reserves using the commodity which is available in country? Uganda is not a major gold producer, but they do have several mines as well. We do expect and see other countries jumping on board. South Sudan, like I mentioned earlier, the governor there, he did say he's looking at what's happening at the moment and will be bringing legislation to parliament and to try and see if that could be something that could be approved. And Nigeria as well. Recently, also lawmakers there asked the central bank to begin to look at using gold to shore up the economy. So there's definitely, I think, some trend or some theme that's playing out along across the continent in different measures. But I think the entire sort of like framework is about diversifying and supporting the different economies ultimately.
And Ray, you have a story out now about how Zimbabwe's gold-backed currency is actually being used. Potentially that is coming from the central bank governor telling that to reporters. Is this a success story already? Is it too early to know whether or not this will be a success for a place like Zimbabwe?
Yeah, so definitely we had a chance to interview the central bank governor, John Mushavan, and he's bullish in terms of what the gold-backed currency, the ZiG, is short for Zimbabwe Gold, has done to the economy. Inflation has been tamed. exchange rate volatility has ended. So from that standpoint, in terms of the immediate visible turnaround of the economy, he's very bullish about it. And what he's seeking to do now is to increase the gold reserves. When the ZiG was launched in early April, it was backed by 2.5 tons of gold and about $100 million in foreign currency. So the governor, when we spoke to him, he's targeting to have over 3 tons by the end of the year in terms of the gold holdings, physical gold holdings. So already that signals that this is a path that Zimbabwe is committed to, and they're seeking to continue on it.
And I wonder, are people actually using the ZiG? Is it now being used more than the dollar was?
So the US dollar is still the dominant currency of transaction in the economy. It's, as of the latest statistics that we have, it's holding about 70% of all transactions are done in dollars and about 30% in the ZiG. So initially, when the ZiG was launched and took over from the defunct Zimbabwean dollar, it accounted for about 15%. So it's doubled in just over 3 months in terms of its usage. And the government has also created, the finance minister last week announced his budget, where he's basically ordered government departments to accept payments in local currency in the ZiG and not in US dollars. So they're creating these pockets of demand to have that demand or to create demand for the currency. But in terms of the numbers, there's certainly a lot of usage now on paper. But day to day, I think the preference for ordinary people is to transact in US dollars. That's what people have access to easily. ZiG banknotes, not so much. I've only come across 110 ZiG note, which is about 7 US cents since the time the currency was launched.
Wow. Just one in a few months. Let's just end then on gold. You were mentioning the price of gold. You were just taking a look at it. It's constantly changing. You said it's pretty bullish forward outlook for gold. Is there anything maybe that could get in the way of that?
Not at the moment. The outlook from the World Gold Council really is gold is going to continue on its path. Obviously, there's a lot of attention on the geopolitical tensions in the Middle East and the US election coming up in November, and also the Fed, whether it's going to cut rates. So I think at the moment, really, the bet is still on gold. I can't immediately see a shift from that.
Absolutely. And it's interesting, too, to look at how the other commodities play out as well. There was a note from Bank of America about silver in particular and how that compares to gold. So it'll be interesting to watch those metals. Thanks so much, Ray. Really appreciate your reporting and for joining us on the podcast this week.
Thank you, Jen.
You can read more from Ray and the team on Bloomberg right now. We will put a link in the show notes. So clearly, this is African nations responding to the uncertainty in the world right now and what that might portend for their own economies. But it might be too early to conclude that this gold rush is actually a silver bullet for countries struggling with currency volatility and their own financing setbacks. This program was produced by Adrian Bradley. Don't forget to follow and review this show wherever you usually get your podcast. I'm Jennifer Zabasajja. Thanks so much for listening.